Hi everyone, my name is PK, and here I have Vinay Ranganatha, who is a client of the Property Investment Accelerator. He, by background, is an IT professional based in Sydney. He's bought two properties over the last sort of 8-ish months. And in this episode, we're going to deep dive on the process, mechanics, and rationale of equity extraction. What is equity extraction? How you can go from one property to the next without using any much more of your own hard-earned savings. That's exactly what Vinay has done. I talk about this a lot, but it's really cool that we have a really tangible, real-life example recently, literally in 2024, going into 2025, from Vinay. So I'm very grateful that he's been able to make time for this episode. And Vinay, congratulations again on your two properties. Welcome to the Oz Property Investment Mastery Podcast. My name's PK, and I help busy people build passive income by buying top 5% growth and cash flow property and build a portfolio using data without wasting months doing research, spending weekends at inspection or catching flights, or dropping $10,000 to $20,000 on buyer's agents every single time. So if you're confused, lack confidence, and just overwhelmed with all the information and marketing misinformation available online and don't know where to start, then this show is for you.
Thank you so much, PK. It's definitely a privilege to speak to you in person. Um, a little did I thought that I would be a part of your video one day because I just started the Property Investment Accelerator probably a year ago, or a little over a year ago, and here we are. Thank you so much for this opportunity. We'll look at how things move forward.
No, thank you for your trust in me, and as you said in the email you sent me, your trust in the process. I think that it's
Yeah.
a really hard work for me to earn people's trust, but I'm glad to see the feedback loop, and then we have episodes like this. So that's really pleasing for me. Maybe we'll just start from the start, as we always do. What was your property background before you did the course, and like what motivated you to start?
Sure. So basically, I'm from India and been working in IT industry. Both myself and my wife, we've been married for 8 years, and we have two kids. We've been working in IT for the past more than 12, 13 years. I recently moved to Sydney. When I say recent, it's in the end of 2021, just after COVID, and all the time I was just exploring options on when you have two people earning in the family, obviously you'll start looking at making some savings and investing your money in the right place, and moreover diversification. I'm a person who invests in safe assets. When I say safe assets, it's just on. When I was in India, I used to only invest in like mutual funds and systematic investment plans and things. So after I moved to Australia, um, I heard that you do not have as many as options or investment instruments here compared to what you get in other countries. I'm not comparing, but every country's dynamics are different, and the way things function is different. And that's when I heard from many people that property investment is the way to go forward in Australia. And I was like, okay, that's not something that I, an expert, nor have I learned, and that too, especially not even in India. And how do I even get to know or understand the process of property and investment? Because property investment, as such, quote unquote, it requires a large sum of money. So we've just migrated to a new country, and how would I invest and how do I plan things. That's when I kind of started speaking to people, and one of my friend, who's not even a member of your course, he watched your YouTube videos and said, "Hey, just for the sake of understanding, there's someone on the YouTube called PK Gupta." This was like way back in 2021, end of 2021 or start of 2022. Just watch his videos, and you probably get an outline of what property investment is all about. And that's when I kind of started watching your videos even before becoming a member. So that's when it started, and from there on, things have progressed very well, I should say.
Right. Thanks for sharing. You know, in our Facebook group, which is obviously public, we often have these discussions, sometimes debates on, property versus shares, property versus international shares. A lot of people from an Indian background, they say similar to what you're saying today, that there are many more investment classes to invest in that people get ahead through in India than there are in Australia, which I don't have personal experience of, but a lot of people say that. I guess one of my just a follow-up question to that is I know we'll have a large viewer base that is probably from a similar background to yourself. Like, why did you invest in Australian property? Why not stick to the tried and tested? Presumably, you can invest in India, whether it's mutual funds, index funds, or whatever it is, ETFs, etc., whilst being in Australia, right? Like, why not stick to that? Why get your foot in? Like, why start Australian real estate?
Well, I must say this may sound illogical, or maybe it sounds logical. I don't know. The only thought I had was, um, you know, things can go wrong in different countries, right? Something may go wrong in US, and that time the economy may fall, or due to whatever reason, something may happen in US, something may happen in India and Asia Pacific, and something else might happen in Australia. Having done only the mutual fund or index fund ETFs part in India, I I've never invested in any property or a piece of land or anything in India because of the complications. I'm not quoting anything wrong, but just that it's a bit more complex there. But here, when I understood that things are systematic and the margin of error is so low, um, and that is the way to kind of build wealth, or maybe that's one of the best way to build wealth here in Australia. I thought having investments in two different regions altogether, India for whatever time I worked there, and a part in Australia would kind of give me a different diversification aspect. And as it is, I've never learned something new in the past recent years. Maybe I thought I'll learn, get to know more about property investment, building wealth, and building a portfolio. Of course, for two reasons. One is for diversification, like I said. The other is for securing my future, for the family and for the kids as well. So diversification is the main aspect, and two different regions altogether.
Right. Yeah, that makes a lot of sense, and I like that you wanted to learn. You hadn't learned something new in a
Yeah.
long time, so it kind of it shows a lot about a person when they say something like that. And so you bought in Perth, your first property through the
Yeah.
course. We're gonna get to equity because I really want to do a deep dive on equity. But can I just ask you, I mean, in 2024, last year, Perth was fantastic as it was in 2023. You obviously, your property went up depending on which bank valuation you look at, maybe 70K, 80K, 90K, 96K, etc. But based on real on the ground sales comparables, it has gone up a lot. Nowadays, start mid of 2025, there's some conjecture that Perth is slowing down, that Perth is probably going to start going backwards. Now, of course, there's been noise for the last 5 years, and if people listened to that noise, they wouldn't have done what you've achieved. But what are your thoughts on that? And like, you've got two properties in WA now. Like, what are you seeing on the ground? Are you seeing that it's hard to get tenants? Are you seeing that the rents aren't rising? Are you seeing a change in sentiment from talking with your property managers, or is it more of the same?
Well, definitely 2023, end of 2023 or 2024. So there are two aspects that we discussed. How about the pricing and if the market is kind of going flat or backwards? The second question is on how the renter, um, demand is playing. So first, I would like to take the you know valuation of the price point. The major difference that I see is from the time I've been exploring properties in Perth, um, the number of listings that used to be there when I bought the property was like too low. I find a property, and before even I could do my CMA, or before even I could start analyzing the property, and make a few calls to just check on few aspects like housing commission and other aspects, the property used to go on offer. So the number of listings as compared to when I bought my property and in the recent past is kind of a bit increased. The number of listings, I'm seeing a lot of listings nowadays. And you find options to choose and put an offer on the best among the 5 or 6 properties you found. But that was not the case like 7, 8 months ago. That's my observation, because I'm someone who will always keep sticking onto real estate and domain and keep finding properties. There's
Yeah.
an option to zoom out and zoom in on the map area as compared to search a suburb. That gives you a better view of where the properties are. And having seen so many listings, I think the number of listings have increased a bit. So does the price as well. The price what we used to get for a 3 by 1 or a 4 by 2 is not the same now. It's definitely more 100, 150K more than what used to be on the advertisement page last year when I bought the property.
Mm.
So that's on the you know property perspective. Talking about the renters, I don't think there is any improvement in terms of more houses being available for renters. I think it's still going down. Um, um, from past 1 year, I've got a tenant who's willing to pay whatever price. I mean, I must say this because when I bought the property, there were about 12 applications out of which we just chose one.
Mhm.
And that was just on the day of settlement. Uh, and ever since then, there's been no talks about uh, you know, changing the tenant or anything. And 6 months into the property, we had to increase the rent based on the market standards. And they were like quite happy with that. And when we spoke about that, I heard from my property manager that they're willing to stay. You just quote the price and they're willing to pay that. So that's the kind of demand that I see now within Perth, not just within Perth, it's in WA. I think major two regions, one is Bunbury and WA. Um, and recently on the second property, I think they're paying a premium than the current market rent, because we had advertised for an X amount, and we got two applications, not two applications, about 6 applications, out of which two of them were willing to pay 10% more than asking rent price. So the renter side, the demand is like crazy, and I think there's less than 0.7%. The renter vacancy rate, I should say.
Right, right.
Yeah.
So it sounds like the capital appreciation is happening, but at a lower rate because there's more supply in the market. But at a macro level, there's still an imbalance of demand, more
Yes.
demand than supply. But supply has improved to a healthier level, but it's still not. I shouldn't say healthier level. It's like, okay, now it's not chronically sick, but it still has the flu. It's still not at the right level just yet.
Yeah.
And on the rental market, which is completely different market in many respects, it's still like the rental market is completely sick. It's very unwell.
Yeah.
There's not enough supply. So, thank you for that update because it's easy for all of us to rumor what's happening in Perth, and of course the data doesn't lie, but it's always nice to hear
Yeah.
from someone who has assets there and real
Yeah.
on the ground experience. Let's go into your equity side of things
Sure.
now. So maybe you can if you could share how much you bought that first property for, if you're comfortable doing that, and then
Yeah.
just take us on a journey of in how many months, how much did it increase by? And of course, we can't take that entire appreciation as
Correct.
equity. So how much equity were you able to take out of that? And then did that form your entire deposit for your next property? And just how the mechanics works with dealing with mortgage brokers, etc. I know there's a lot of sub questions packed into there, but maybe you just share your real life step by step process, and I think that will really illuminate the subject for everyone.
Yes, definitely. So having done your course, everyone should. definitely be aware that the way to move forward with building your portfolio is to draw equity from the previous property or current property and then move on to the next one, which will serve the deposit. That was like my main, aspect that I had on mind. Soon after buying the Perth property, let me tell the pricing. The the time when I was searching the Perth property, everything was in high 400s. Like asking price was in high 400s. Very few properties, like lavish 5 bedroom with a big swimming pool and things like that, used to go in 550s and high 500s. Um, 7 out of 10 properties were listed in high 400s, and I was in that mindset that okay, I'll get a property within 500, but that was not the case. When I started putting offers, all the properties was going for 50, 60, 70, sometimes 90K more than the asking price. And that's when I was kind of thinking, okay, is this for me or is this not for me?
Mm.
Because what PK teaches there is something else, and what I'm seeing in the reality is something else. It was kind of overwhelming, but it is just the timing, I feel. You keep looking at properties. I remember in one of your mentorship call, I was disappointed. I said, PK, any offer that I put, it's like going away within 4 days, 5 days, and that too for a premium. And how do I tackle the situation in the hot market? And you had given a really good example and said you could probably fail on 5 properties or 10 properties. I'm sure you will succeed on the 11. Just keep doing. And you gave me an example as well. So that being said, my property was listed for 499 from 499. Um, the day it was listed, I saw it like probably a few hours ago. It was listed, and I called the agent and said, I'm really interested in the property. Um, and they said, okay, the price because whatever you teach, we speak the same way so that they know that we are a serious buyer. I put an email offer for 512K, because anyways all the properties, 9 out of 10 properties were going for premium. I could not go for a lesser number, because in the first call itself the agent told me that um, it's just that for the sake of it we have mentioned 499, but we've got higher offers
Mhm.
already within 2 3 hours. But I asked, is there an email offer or written offer? She said no, everyone has spoken to me verbally. I said, okay, I'm going to give you an email offer right now in next half an hour. And I wrote an email for 512K. The listing was for 499. um, she immediately called me and said, I think we've got higher offers as well. I said, okay, I'm going to revise my offer. um, and what price would buy this property? What is the ballpark that the vendors are looking at? She said around 530s. The next email was for 530K, and she immediately called me the next morning and said, your offer is accepted. So the property was bought for 530. The moment I bought for 530, the loan LVR ratio, at that point of time, I had to go with 86%, 87%, um, LVR and 13% deposit. Um, so the moment I bought this property, everything went fine. A small learning that I had to share with everyone is, when you're buying a 500,000 or 550,000, 600,000 property, um, I missed out on getting a plumbing inspection and electrical inspection done. It costed me a bit of money after I bought the property. Along with building pest, I strongly recommend go for electrical inspection and the plumbing inspection.
Yes.
So long story short, we got many applications. We chose an application. They immediately occupied the property. After about 15 days or so, we had a complaint that the ducted aircon is not working, and that was peak summer. So I had to literally get an electrician, verify, check everything. It costed me about uh, four and a half, $5,000 instantly. Had I done the electrical checks, probably it would have got um, you know identified at that point of time, and probably would have reduced the offer amount with that money, or asked the vendor to fix it. So that's just an extra piece of information.
So what
So
if I can just interrupt to just understand. the reason you didn't go with a plumbing and electrical check, because it's something that is recommended, especially for like an older type property. Is it because of like you were just in a rush to buy it, or was there some other reason?
Um, no, the main reason was the property was more or less renovated. They had put a fresh new floorboarding. They had put new lightings and freshly painted and all that. I thought I mean, that was just an assumption. And they upfront told me that they have replaced some of the switches and some of the electrical wiring. I thought maybe when they have done all that, probably the electrical standards would have been up to date,
Mm,
and that's a mistake. So AC is altogether a different part, right? It's not on the walls, or it's not. It's a ducted aircon.
yeah.
It's not a split aircon, which costs a bit lesser. So the ducted aircon is like centralized for the entire home. One of the fan blade broke, and he said it's pretty old and you can't replace it. You don't find a uh, spare part for that. It's better to get it replaced. This is what I heard.
Okay.
So the pre-settlement, some people might think, okay, did you not do a pre-settlement inspection? The pre-settlement inspection, the property manager goes and checks everything. At that time, it was working fine. Little did we know that the fan was kind of wobbling and it just broke. So
Yeah.
that's the takeaway for me.
Right.
Yeah. So yeah, coming back to the equity part. The moment I bought the property and rented it out. 3 months into the property, I called one of the the mortgage broker who I was dealing with. I asked her, "Hey, it's been 3 months into the property. Um, I want to see how it is valuation. How is the valuation at this point of time?" She said, "No, 3 months is a very short time. You probably will do a valuation after 6 months." I said, "Okay, we'll do it after 6 months," because I was I'm I was not aware of how things work in the equity world. Mortgage broker's statement was like, for me, end of the day. That's what I used to believe in. And I said, okay, I'll contact you after a couple of months. I contacted her after 6 months. She said, 530 you bought, and as per the core logic, it's just showing me 560, and you do not have 80% LVR. Having given that aspect, you might have to come back after some time because the valuation is just 560. And on the other hand, my friends and in the community as well, I saw people posting that my Perth property went up by 100,000, 120,000, and it was the same duration that I bought probably a couple of months earlier. People had kept posting that, okay, I got this much of equity, and that's the story that I used to hear. Um, and that's when I thought there's something really wrong in my approach, or I should just talk to someone to get a different perspective. And I called another mortgage broker, who one of your recommended mortgage broker only, and he told me, no, that cannot be the case. Just give me your address, and I find out what I can. And he came back to me, and he came to me and said, you know what, I'll get two physical valuations and two desktop valuations and one curbside valuation. We got five valuation from Bankwest, NAB, CBA, um, ANZ, and Suncorp. I remember.
Okay.
None of them quoted less than 650K. I was like taken aback. This is when it was in July or August 2024.
So you
I
bought
was
it for
like, okay,
530, right?
yep, 530, and they evaluated at 650, 660, and 680. I was like, okay, it's at least 130K of disparity what I see from 2 months ago to, um, and that's when I pursued that opportunity, and told, okay, what's the best? So if you want maximum equity, you go with this bank, but there's an interest rate change. I was paying a hefty interest rate of 7.54% from a tier two bank because I was the only person earning at that point of time.
Mhm.
And then the mortgage broker said, you'll have to refinance it. Two things at a time that I did. One is refinancing, and second, equity, drawing some equity. So I asked him, does it have to be done with different aspects altogether? He said no. When you refinance it, the bank valuates at certain percentage, and gives you the equity. Although I had about 150K raise in the property price, because I was not on the 80% LVR bracket, they'll consider 80% loan to value ratio of the today's current valuation. Meaning, if my property is valued at 680,000, they'll provide you a loan of 80% of that 680K and not 100%. So that's how I kind of dealt with a couple of banks. I went with the maximum equity because that will fuel my second property deposit. So I went with Suncorp and they gave me a better interest rate. And here's the fun part: whatever premium interest rate I used to pay, the monthly installment that I used to pay was the same even after drawing the equity because the interest rate reduced by almost 1%. So having drawn the equity and having a lower interest rate kind of compensated there. So more or less, I got that 69,000 or 70,000 to be precise, equity from the first property.
And was that
And
interest rate lower because you're on 2 incomes, or was it lower because the LVR was lower?
um, it was no LVR because I had to pay LMI for the first one,
Mhm.
and obviously because it is less than more than 80%, you have to pay LMI. But
Yeah.
I think my wife had still not started working at that point of time.
Okay.
With just the same income, I just raised the query to the Suncorp, and because of the valuation, and I don't know what other aspect that they saw, they gave me 80%.
Did the
But
rent go up in that meantime as well, Vinay?
yeah, 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 yeah,
Right, okay, maybe that made an impact.
yeah, yeah. Rent went up because the 6 month they would put a 6 months clause of rent review in the application, and the rent went up. Yes,
Got it.
yeah.
Okay. And did you
So that's
consider,
the
sorry, I don't want to
yeah.
interject in your story, but I just has
No,
I
that's fine.
think the audience will want to answers to these questions. Like even when you refinance and pull equity, forget equity, even when you refinance, you can refinance above 80% LVR. You just have to pay LMI again.
Yes,
Of course, that means that you can extract more equity, but then you have to
yes.
pay LMI again, which is not a cash expense. It just gets capitalized onto the loan. Did you consider doing that, or were you like, no, no, I'm happy with 80% this time?
Okay, two things into it. And paying LMI is a really good option, so you get more money from the bank, right? Just by paying like 3, 4, 5 grand, you would probably extract 30, 40, 50K more. Uh, but the other aspect which we had on mind was my wife was anyway going to start working. We had that plan of, again, she resuming to work. I'm sure we knew that we'll have more income. So rather we not pay another 4, 5,000 of LMI. Just go with 50%, sorry, 80% LVR, and use a little bit of our savings than just paying 3, 4, 5,000 as LMI. So that's when we thought we'll just go with 80%. And also, if you go beyond 80%, the interest rate was slightly a bit above than what they gave for 80%.
Right.
I thought, okay, we'll just keep the interest rate also low. And we had a bit of savings. Along with that, that 70,000 was the right amount for us to plan for the second one. So that's
Right.
the whole idea.
And what was the deposit? Do you remember what was your total deposit that you paid for your first property in Perth? The one that was for
Yes.
530?
Yes, it was very minimum. I paid about $68,000 deposit.
60.
Um, 68,000. But this is excluding the LMI. So
Right.
LMI component gets added to your loan, right? So I had to pay 68,000 a deposit for my first property.
Oh, you paid LMI from cash rather than capitalizing it onto the loan amount?
Now I did capitalize it on the loan amount, but just that I'm segregating it as two different components and just
Oh, I
adding it.
see. I see.
Yep.
So what I want people to understand is that, you paid, let's say 70,000, 68, 70,000 for your first property, and after 8 months, you basically got that back as
Yeah.
like another deposit. So the
Yes.
capital appreciation in 8 months basically gave you 100% return on investment in real equity terms. extractable equity terms. In real terms, the capital appreciation, it was like more like 100K, but in
120K.
120K, so like double.
Yeah.
But in
Yeah.
extractable equity terms, because as you explained, Vinay, you can only take 80% of the current valuation. You're able to,
Yes.
and that's the, I mean, I know I'm kind of getting excited here, but that's the beauty of property investment. You can take that equity and then use it to fund another deposit. Of course, equity is not free money. I don't want to mislead anyone. It's a
Yeah.
loan. It does
Yeah.
incur interest. So how are you? Sorry, I cut into you. Please carry on. But I
That's fine.
also I want to understand, like, because it is a loan, you're paying additional interest, but then you're saying actually the interest rate was lower, so you're not paying an additional interest amount every month, which to me is, I mean, is too good to be true, but it is true.
Yes. Yes. I learned that after getting onto a conversation with my mortgage broker. I told him that, for this amount of loan, I'm paying, just for example, about $3,100 per month. And I'm slightly negatively geared. And he's like, okay, this is the way it works. And he said, you're going to draw the equity, interest rate gets lower, and you still pay the same amount, $3,100, or rather $30-40 less than what I used to pay. And I was like more than happy. If the amount is the same, it's not going to hit my pocket in any ways, and I'm still getting back the money that I just invested 8 months ago into the second property. Why not? I mean, like you said, that's the beauty of it. I was definitely over the moon, and we
I mean,
went for the second property.
it's impossible for most people to save $80,000 for your second deposit,
100%.
post-tax. It's impossible for a lot of people, for most people, I would say easily. So that's really the beauty of it. If I can ask, like, what are your I mean, one thing that I want for people to connect with is that just because the interest rate is high, that doesn't mean you should avoid investing. I mean, you were paying almost 8% for your first
Yes.
property. Provided your household cash flows can sustain it, the interest rate is only a point in time. It can change as it has for you. What is like the average interest rate you're paying across those two properties now?
6.3.
6.3, which is pretty competitive. Like that's,
Yes.
I would say, a little bit on the lower side for an investment
Yes.
home loan in 2025.
It is definitely. And also considering the fact that I've never gone for P plus I, principal plus interest, because that's the strategy that you taught, and I want to stick on to that strategy and just paying interest only. And I think that's the lowest that I've heard from people, 6.3, for interest only. I think that's something the banks have agreed to, and they offered me that price. I was like, okay. But these are, by the way, are two different banks. This is the average 6.39. Sorry, I misquoted that. The average is 6.39 because one of the property, the first one where I've gone with Suncorp is at 6.6, and the second one is at 6.29, which is gonna come up to 6.4 as an average, 6.39 to 6.4.
Right. So you've diversified across different lenders, you haven't cross-securitized. And once again, coming back to this process and mechanics of
Yeah.
equity release, did you find that one mortgage broker was better than another? What are like some, not all mortgage brokers are geared for this type of strategy. And of course, you can
Absolutely.
go very aggressive and go interest only, interest only, interest only. Or if you're more in the consolidation phase or you have a conservative risk appetite, you can go P&I for some, interest only for others. There's
Yeah.
pros and cons. But in terms of mortgage brokers, is there any lessons learned there?
100%. Speak to a couple of them to get different perspectives. And one big takeaway for me is, if you're talking to a mortgage broker who is an investor himself, or probably who is um, guided a lot of investors and knows about different strategies, or knows about what's good for every individual based on their circumstance and their income, and guides you to the right channel. Because I gave an example, I don't want to take names, but the first mortgage broker, um, she was not in favor of what I was looking forward to. Uh, she sold me something. Of course, I have the due respect to her because when my borrowing power was too low, She still gave me a couple of options, but my interest rate was too high. That was a suitable solution for me at that point of time, which that mortgage broker thought. I thought that's how it is going to work going forward, but that was not the case after 6 8 months. So speak to someone who can give you um, good understanding of various options available. Some people might say, "What's your primary purpose?" The second mortgage broker, these are the questions that he asked me. Is it to reduce your interest rate significantly, or is it to draw more equity? For me, both were important. I said I want to find the right balance. I want a certain amount of equity and also not pay anywhere close to what I was paying previously. I want a significant drop as well. That's when he kind of told me that this is a balance. You can go with 80% LVR so that your interest rate is this much and you are still able to draw this much of equity. Although my property increased by 120, 130, 40K, whatever, I felt having 130, 40K is still good, but again, paying close to 7% of interest would burn my pocket. So I went with lower equity as well as balance with the interest rate being on a moderate range, which kind of gave me a good head start for the second one.
Right.
That's the whole idea.
I mean, these are really nuanced points, and I think only through education and also just talking with professionals like mortgage broker does one learn. For
Yeah,
example, yeah, there's a trade-off between how much equity you can extract and getting this sweet spot with the correct
yeah,
interest rate. Most people just go to the broker, Aussie Home Loans, nothing against Aussie Home Loans, but just a standard outfit. So I can't get the lowest interest rate. But you have to ask yourself, like, do you want to save money or do you want to make money? Because the
yeah,
upside on making money and investing in another property or multiple is so much more than the benefit from saving. There's nothing wrong
yeah,
with saving, like you said, your priority was both, but you should always have the goal of making money, in my humble opinion. And one point that just came to mind as well is that if you had gone principal and interest, then well, if you had gone principal and interest, then that would have meant that you're chipping in more towards each property, which may mean that you couldn't have afforded the third property. Now, everyone's different, but that's another consideration. And also, a lot of times people ask me, PK, should we go fixed loan or should we go variable loan? Now, if you had gone
yeah,
fixed loan when you had got that first property in Perth, then that would have made it almost impossible to refinance with another lender.
yeah,
Maybe you could have
yeah,
refinanced with the same lender, but they may not have given you a better interest rate. They may not have given you the best valuation so that you can get the most
100%.
equity out. So these are all things that the lending strategy, the finance strategy is as important as property selection in many respects. And it really behooves everyone to learn it, just like you have, Vinay. Is there anything else that you wanted to share or talk about in terms of the equity extraction piece?
Uh, yeah, I mean, that's pretty much it. We covered like most of the aspects. Talk to a couple of them is a key takeaway for you to understand everything. And the mortgage broker who, kind of gives you options in your favor by understanding your situation. Those are the two uh, key takeaways from the equity part. Yep.
Right. So you got that equity. Did that comprise the entire deposit for your second property, or did you chip in some as well?
Yeah. So we chipped in a bit of money. Again, having the LMI part, we had a bit of money because both of us started. I mean, my wife started working, and we had a bit of savings along with the equity. It's the equity contributed a maximum amount of the deposit for the second one. Nevertheless, I bought my second property. Can I discuss about the second one, the pricing and
Yeah,
yes, sir.
yeah,
Yeah.
yeah.
Sure. The second one, which I recently started exploring, like the last quarter of 2024, uh, since I knew I definitely wanted to diversify between different states. But as most of the questions that has come through in your community, and as per my research and analysis that I have done for the second time, Queensland was my interest, but then most of the suburbs and the 36 months median growth percentage was probably close to 50 or maybe higher than 50, which kind of cut down my options to a large extent. and it was also time versus money for me. I just want to take a step back and say the Perth property as well, because it was a hot market. I just had to think this way. If I'm paying another 10,000 more on the offer or the price that I'm paying for the property, and I'm not against not paying that 10,000 extra and losing out on the property and finding the next one might take another 15, 20 days or 1 month or 2 months, you never know. And at that point, like you will see a 10,000 raise in the same property, a similar property elsewhere.
Mhm.
That's only during hot market, not all the cases. The same was in case the second time as well. It was time versus money for me. Um, we found a property, we liked it. It's a large block of land, uh, more than 800 square meter, and it's a brick built again. So I went in this property. I had to again go for 80% LVR because we had a bit of money,
Mhm.
and avoid the LMI part. Again, avoiding the LMI part is not the key takeaway here. Having LMI would increase your borrowing, would increase your deposit significantly, and save a bit of money for you for the third one. But our financial looks different going forward. So based on that, we thought 80% is good enough for us. We can upfront chip in some money and pay, and avoid the LMI. So it's a different approach altogether based on individual situation. So about the second one, it was listed for 575K in regional WA, in Bunbury. So I put an offer for 555 based on my CMA, and the agent called me. There's a takeaway in this. The listed date was 5 days, and they had an open home the coming Saturday. And I put in the offer on Monday, and he called me back on Wednesday for a negotiation. And during the negotiation, I this was after the email written offer that I gave. They called me and said 555 is kind of on the lower side because we have advertised it for 575.
Mm.
I said, so based on my valuation, this is what it is coming up to on a median, price. He said, okay, is that the best walkaway offer? I said, see, I'm really interested in the property, and I think if you can give me a ballpark as to what price would more or less seem interesting for the vendors. He said, we've already given the price. Anywhere close to 575 would give you the property. I said, I'm going to put in my best offer, and I put 560K, and said, this is my final offer. And he again called me, and that's when the negotiation happened. He said, if you're going to give me anything closer to 570, we're going to cancel the open home. I said, okay. And I increased another 2.5, and I said 562 and a half is the maximum that
Mhm.
I can go up to. And I just hung up. And he called me after half an hour and said, they've accepted your offer.
Wow, it would have been so easy for you to just be like, "Okay,
Yeah.
575," or like 570 or 580,
Yeah.
like as a like uneducated person, you'd just be like, "Okay," like you said, time is money, right? Let's just get
Yeah.
it done. But because yeah, I'm really impressed actually. Thank you for sharing that story. I think that will help a lot of people. It's a fine balance between being silly and like just
Yep.
underdoing it to versus like being strategic and nuanced and actually
Yep.
getting it done. I like it how you put in this not the round thousand number as well. That kind of
Yes.
all those things sort of add up, and they allow the person, the vendor, the seller to think that okay, Vinay's really thought about it. He's not kind of like flippant going up in fives or anything like that.
Yep.
Um,
Yep.
Oh, thank you. Thank you. I'm just conscious of time, I think this has been
Yep.
so valuable. I think especially in the mechanics of everything, people should have and would have learned a lot. Last question, because yeah, I know I want to respect your time and everyone's time. Last question, what's like 2 questions, but I'll ask them together.
Yep.
What's the biggest piece of advice that you would have for someone, let's say in your shoes, like, maybe they have a professional services background, like white collar job, and they're trying to build wealth, in their 30s, let's say, or not 30s, late 20s, 30s, maybe 40s, couple of young kids, they're building a family, building wealth, but they're just like not sure about this whole property thing. What piece of advice would you give them? And separately, the answer shouldn't be do my course, but separately, what would you say to people who are sort of on the fence of doing the course?
Yeah, this is probably the best way to understand. Like I said, one of my friends suggested Property Investment Accelerator to me um, a few years ago, and I was just like the same any other people who are on the fence, thinking, oh, should I go with some new learning, and how do I trust and things like that. And I kind of wasted a bit of time thinking that way, right? Unless you learn something, I'm a person like I can't go and research everything, because in your course you teach about 10 years worth of your hard work in about 10 episodes or 6 episodes, right? A few hours each. Um, you are probably condensing 10 years worth of efforts in that 6 sessions, and giving it as a valuable lesson for someone. You're not basically advising someone to just go find these type of properties and just put an offer. You're trying to teach them how to find them. It's going to be applied every time you probably look at purchasing the property. It's a lifetime learning, not just a one time learning. So this is not any other course that you might find in Udemy, and the version gets outdated and the next version you'll have to take a new training. No, this is something that you can apply any given point of time. I would say that's the biggest thing. I regret not doing the course. Like, this is my honest opinion. I regret not doing the course in 2022. I did it in 2023. Had I probably given myself a bit of a head start, it's never the same, obviously, like you explain in most of your videos, the right time is right now. And, there's no best time that you keep procrastinating something or keep looking at the future. But yeah, that's my takeaway.
I think that's really well answered. I think confidence comes from not just learning, but doing. The best way to gain confidence and experience, well, it goes without saying, is actually just by doing, not just by theoretical understanding. So we'll stop it there. We've gone for a long time. Thank you, Vinay. Congratulations on your two properties. I know that there's more coming. You have more borrowing capacity. You're looking into more alternate structures by which you can expand your borrowing capacity. I wish you all the best with that. I know we'll stay in touch, and thank you once again for making time for this session and helping everyone in the community.
Thank you so much, PK. It was really a privilege talking to you. Little did I thought that I would one day go on call with you like this and share my experience. And definitely, I want to once again thank you very sincerely for the course that you have put out, and helping the people in the community, building their wealth. Thank you so much once again. It was a pleasure talking to you.
Thank you, Vinay, and thank you everyone for watching or listening. Hopefully this helped inspire you, educate you. There's more than 200 of these client interviews in my client results playlist on YouTube. I always say this, but I'll say it again. Honestly, don't mind if you do the course or not, but go through them, because you'll hear and be inspired and genuinely learn from amazing people like Vinay. Amazing, but at the same time, very ordinary, like normal people like you and me. And that way you'll resonate and actually have the desire to get ahead and actually do it. So go ahead and review those client results, be inspired, hit the subscribe button, hit the like button, and most importantly, share so other people can avoid procrastinating for 2 years and start now as opposed to 2027. Thanks again, and thank you again, Vinay.
Thank you so much, PK.